Hey there, Vinny from Project Frugal, episode 47, A Road to 100k, Silicon Valley Bank collapse. What impact has that made on Denise's portfolio? We've put another $1,000 in. Let's see what's happened. Check it out. We're finally back on track with episode 47 of Road to 100k. However, in the last couple of days, since Friday last week, now being Wednesday night, the Silicon Valley Bank collapse. Let's go and have a look and see what happened. Silicon Valley Bank, who are they? What are they? Well, they're the 16th largest bank in the US. Well, they were at least. They do business with tech firms and venture capitalists. During COVID, they got a lot of deposits. Basically, their deposits tripled very quickly. They put some of their money into loans, other loans, and US Treasury securities or US Treasury bonds. They bought bonds when interest rates were low. When interest rates started rising, the value of the bonds started dropping. Deposits started leaving the bank faster than the bonds were losing their value. They needed to raise some capital and they had to sell their bonds, which made a big loss. They tried to raise some capital. Unfortunately, it was a little too late. The investors freaked out, sold off the stock. A bank run started where people tried to withdraw $42 billion on March the 9th, which was last Thursday, and by Friday morning it was seized by regulators and the banking system stopped for that particular bank. Joe Biden announced depositors' funds would be backed by the Federal Deposit Insurance Corporation, aka the FDIC, and well, they've got a limit, an insurance limit of $250,000, so anything over and above that, good luck with that. That's pretty much what's happened. So while that was happening, basically the investors got freaked out and the market, the US market at least, went down, and unfortunately New Zealand market went down with it. But that's not the end of the story. We still chucked $1,000 into stocks, into sharesies, into Denise's portfolio. Let's have a look. Well, there we go. It's not all doom and gloom. So another $1,000 into the portfolio. It was $2,075.49 in the wallet. Now it's $3,075.49 in the wallet. So another $1,000 put in, which at this stage is not going anywhere because, as we've stated in previous videos, we're waiting to build this up at $1,000 a fortnight until we hit $5,000, in which case we'll get a $15 plan with sharesies. And then we'll probably put it into 4 or 5 different companies. Who knows, maybe 10 companies, maybe one company. But we'll be paying a maximum of $15 for that particular month. And then we'll just put more money into it again, carry on building it up, get another $5,000, do the same thing again. Once we've done that, we'll cancel the plan so we don't get charged for the extra month. Because if we're saving $1,000 a fortnight, it's going to take, how many weeks is that? That's basically 10 weeks, so almost 3 months to get every every $5,000. So yeah, 1 month we'll be investing and then we'll be saving up for the next few weeks and do it all again. So 6 weeks after that, then we'll chuck another $5,000 into something, save the money up, do it again, and one day we will reach that magical 100k. So I'm looking forward to that. Let's go and have a look at the chart to see what has actually happened. And obviously, since everything's been pear-shaped for the last year, really. So especially with this latest run here. So if we go in depth and go and look at the last week, we'll be able to get a better thing on that. So 8th of March, 9th of March. The losses start accumulating at this point, and at this point, we're losing money here. So it's gone from 4,600 negative, 5,000 negative, and it's carrying on. This is the weekend here, so it sits on $5,038.57 negative. Come Monday morning, well, she's all over Rover, and we've lost another $300. And then yesterday, we've lost a few more $100. Oh, brilliant. And then, of course, today the market's sort of recovered somewhat and gained another $400 back because the panic is over for now. What a surprise. So that's what's happened with that. So $38,000 of actual stocks and $3,000 in the wallet, making a grand total of $41,000 something or other. We'll check that out very shortly. So no more shares have been purchased, as we've stated here. The money's just gone onto the wallet, saving it for a rainy day and maybe another 4 weeks' time. Let's go and have a look at the portfolio. So today, good day, $400 back up on this particular portfolio. It's always a lottery every time we do one of these, whether it's going to go up or whether it's going to go down. Over time, generally what I've found is 2/3 of the time, excusing anywhere from January 2020 on to this year at least, 2/3 of the time the market goes up, 1/3 of the time the market goes down. That's what I've seen historically, and I'm sure that will happen again when these stocks finally get a bit more traction again. But interest rates have eased slightly in the US, which is a good thing for the stock market at least. If inflation's going down, then it's better for the stocks, and it's better for homeowners, people with mortgages, better for everyone, really, I guess. So no major changes on this. We've got a couple of ex-dividend dates coming up tomorrow when Colonial Motor Company and Fletcher Building provide their earnings to the market. And yeah, and then they're, well, in fact, they maybe they have already. Oh no, hang on, sorry, that's their ex-dividend date. Sorry, that's the last time to get in to buy these stocks. We're going to get paid $35 for that one, $44.57 for that one. My bad. Anyway, it's too late now to buy that because the market in New Zealand is closed. PGG Wrightson does go ex-dividend on the 24th of March, which is another 9 days away. And we've got Spark going ex-dividend tomorrow as well. And at the moment that's paying $53, and the Warehouse, which has been a bit of a flop, to be honest. So we've got $413.78 worth of dividends coming up, which really doesn't make a big dent when you're getting big daily losses of $300 or $400. It really goes nowhere, the whole thing. But the whole purpose of this portfolio is just to keep on building those dividends up, and then eventually stop putting money into the portfolio and draw the money out from the dividends. And then you have a passive income that you don't have to work for, that you don't have to do anything. You've done all the hard work up front, and you'll reap the benefits. Let's go and have a look at the NZX50 charts. And as you can see, the week's down, the fortnight's down, the month's down, the 6 month is up slightly, but it has been on a downward spiral here, and the year is slightly down on this time last year. The last video we did was only 4 days ago because we were in catch-up mode because we'd been redecorating the bathroom. And this took second place at the time. When you've got no working bathroom, you've got to get that thing done. So there we go. So yeah, bit of a downturn once again. What a surprise. Nothing much else has changed on this particular portfolio. We've still got the same payment months that we already had. And March and April being good paying months, along with September and October. So these are the premier months where we're going to get the most dividends out of the portfolio, along with June and December. But March and April, September and October, definitely my favourite time of the year because of the dividends. So anything else here to show you? Not really. We can go and have one more final look at the share allocation, which pretty much hasn't moved. So we are going to reduce our holdings in financial services, as I've stated previously on other videos here. We'll probably put some more into consumer cyclical. Oh, it's a tough word. I hate that word. But once we get up to $5,000, anything else but financial services, considering what financial services have been doing. One day they'll come up in the market. They'll be the thing to buy. But at this stage, it's not looking promising, is it? Healthcare is sort of on the way out now that the COVID thing has done its dash. So who knows what will be going on with this particular thing. Maybe real estate, maybe utilities. Who knows? We'll just carry on regardless. Well, there we go. So a bit of a loss there. Once again, what a surprise. Never mind, we'll keep investing and we'll keep carrying on and keep getting up to that 100k, because that's what we want to do. Don't forget to like, subscribe, leave a comment below. Let me know if you've lost some money or made some money or what you're invested in the comments below, and we'll catch you later. Cheers.